everyone, John Henry here, slingshotfutures.com, and welcome to the Daily Futures Market Outlook, where we formulate an attack plan on our favorite markets for tomorrow's trading. Tomorrow is going to be the 3rd of the month, and another day of, well, a lot of the same. We seem to be kind of stuck in neutral overall, where the markets will have a really good move, and then they'll give it all back. And sometimes they'll have a really good day of movement, and then they'll give it all back the next day. We're just not really getting much accomplished. But at least we're getting the volatility. It's better than nothing, and I'm certainly not going to complain about extra volatility. The market definitely needs it. Now, as always, before we jump on in, make sure to swing it over to slingshotfutures.com, scroll down, and click on the Join the Daily Outlook newsletter. That's going to let you sign up for our email list so that you know when these videos come out every single day. We'll send it right to your inbox. And along with that, in the newsletter, we talk about all kinds of different stocks, cryptos, all sorts of different stuff. Stocks, cryptos, options, futures, forex, you name it, it's going to show up in there at some point. It's a great newsletter to get your hands on so you can kind of see what we're all about and, just generally what's all going on. Of course, if you haven't done so already, make sure to click on the live trade room subscription and trial info, and from there you can sign up for a 3-day trial so you can sit down with us in the room for a couple days and see what we're all about. That will let you into the room. You can hang out with us, you can see my screens, you can see the trades that we're talking about, you can hang out with some of the members and chit chat there. It's just a great way to get a feel for what we're doing every day and how we're going to be approaching our trading plan at any given point. Of course, if you do enjoy it, you can sign up for a weekly or monthly subscription, and if you join as a full-fledged VIP member, you get the live trade room as part of the package. Now, taking a look at the euro, first of all, the euro, again, a market that really didn't accomplish a whole lot. They had a general bull rally, but they gave a lot of it back at the end of the day. And notice a lot of that give back happened after that blow off of the highs. They tried breaking through the top, and they didn't get anywhere. It turned right back around and started falling back down through the bottom, and it just gave signs that the market participants weren't really interested in buying high anymore. They weren't really looking for that finalized push. And if we look on the right side here, we can see that we're above that big 1900 level, and 1.2 isn't that far away. We don't have to scroll the chart very far to see that big 2000 level. And maybe that's what traders are getting a little bit nervous of. In the bigger picture, they could be taking profit ahead of it as we start to push higher. But overall, well, we put in a pretty heavy top. And that exhaustion that we saw back here, this big blow off and a complete failure, gives us a pretty big clue that we're probably going to see a lot of the same on the other side. Very frequently, when you blow off the top of a channel like that, when you get to the bottom of it, you're going to see about the same distance of a break down in this case because it's a bull channel. So that's definitely what I'm looking for. Now, another thing that we can definitely keep our eyes on is something that you can look for every once in a while when we have these big failures where they'll double down on the move up. So what I mean by that is they moved up this distance from the start of that spike, and sometimes what they'll do is they'll equidistance that to the downside. They'll deviate it lower, and guess where that puts a big level of support? Right inside of that deviation break out of the highs to the lows. So everything is starting to begin to formulate a picture right around this 18,486 area. And if we need to add more to that, if we look backward, we can see that this level has been a big area of support for most of the day. So now we have 3 things that are stacking up on top of each other all around that 18,485 to 18,500 area, and that could be that sweet spot that we're looking for in terms of a turning point to bounce the euro right back up again. Overall, though, the euro is bullish. We do need to give it that much, even though it is not the best of the bull markets. We need to look to buy cheap. Right now, cheap could start from 18,670, but again, that sweet spot, looking at that 18,500, we'll just call it, inside of there looks like it's beginning to gear up to be a pretty beautiful looking area to buy into. And if it does go a little bit further, we of course have 18,290 as a potential bouncing point to push the market back up as well. So keeping our eyes really just kind of on the low side here on the overnight session, hoping that we get a little bit more of this pull down to get us into that sort of sweet spot where we can look for that break down into major support and then a reversal right back up. Over on the gold market, gold, again, one of those markets that have some really good moves, but they're not accomplishing a whole lot. Big drop to the downside, went into a little bit of a range, finalized the drop, and then reversed all the way back up, and now they gave it all back again. So we're ending kind of neutral, flat in the middle here on gold, and not really accomplishing much at all. Now, the overall movement that we have, likely this is going to transition into a very large range. The high side of the range looks best between 78.5 up to 79.9. And the low looks pretty good between 71 down to 69.8. The lows have a little less proof than the highs do. The highs utilize a lot of yesterday's information to give us some clues, but the lows yesterday do have that failed dip lower as well, so we're probably just transitioning into a very large range. And if we zoom out a little bit, well, it kind of fits, right? We're already kind of in a big range. We really haven't gone much out of this area, and every time they do, it immediately fails and shoots back the opposite side. So for the most part, we're just stuck in a big range, and like we always do with ranges, buy low, sell high. In this case, this has a bullish emphasis on the way up, so we would much rather be buyers on the lows for a push higher. And, well, we're just in the middle right now, so there's not a whole lot we can do. We got to sit on hands until the market comes to us, and then we're looking for some buying opportunities from 71 and really lower, but down to 69.8 and below. Over on the crude market, inventories came out today, and, well, they pretty much gave back everything that the API report did. API report had a big drive lower, went neutral for most of the morning session until around 4 o'clock, 5 o'clock, and then we started getting a bull ramp. Inventories came out, slammed all the way back down to the lows, and then at the end of the day, popped all the way back up and are closing on the highs. So exactly the most consistent of a bull trend that we have going on here. And something that really stands out is going back to yesterday, that monster drop lower. We were talking about this in yesterday's video as well. What happens when the market comes back to this area? That's at 49.67. They haven't even hit it yet, and we're already seeing signs of selling pressure. So there's a big clue that even though this is a bull market closing near the highs of the day, we have a big overhead chunk of resistance sitting at 49.67, not to mention the weekly levels just above that at 49.79 and 81. So there's plenty of resistance above us to try to push the market back down again. And basically all that tells me is I don't want to be buying high. Buying high aggressively, that ended back here when it started pulling back. We're no longer aggressive. We're just in a general sort of upward spike and channel trend. So what I would love to see is a dip lower into major support. 49.30 at the very least. 49.12 would be even better. Then we start digging into the kind of cluster of gross that they had before, that little balance. And then, of course, if it really wants to give us a gift, 48.82. But I'm not looking long-term here. 49.30, I'm looking for a bounce off, and probably up to that 49.67 if it doesn't hit it soon. And that's really about all she wrote on the move up. I'm not anticipating a whole lot more than that. In the overnight, if we do get a rally up into this area, we could even be looking for short-term selling opportunities to drive the market down to buy off of the channel lows. So we have opportunities in both sides of the market. It just depends on what crude wants to give us first. And then finally, the S&P, another market that really didn't get a whole lot accomplished today. Big drive lower. I mean, really just a beautiful trend for most of the morning session. And then 11 o'clock hit, and it reversed almost all the way back up and ending pretty much smack where it opened for a big doji kind of day. Now, obviously, on a daily chart, this is going to be a big rejection since we're going to have the open and close and a monster wick on the bottom. That does show that the buyers heavily rejected the lows. If we zoom out a little ways here, we can see why that may have been. They came down into those major levels of support we were talking about for the past couple days. It held quite nicely, and now we're bouncing right back up. Now, along with that, we did have that earlier kind of channel bottom that's been widening out along the way here, and they really didn't do a whole lot around it. They bounced off of the lows. They tried holding it as resistance, but notice how they're just sort of lacking respect there now. We're probably running into a situation where we have a larger term low and more of a shallower wedge top, something like this. Now, as we get more information, this could easily break higher, going along with a longer-term trend, and this bottom ends up being the channel on the highs. That fits really well also. But we can't get up there until we start breaking through this level of resistance drawing down. So overall, we're still stuck in neutral on the S&P. We're looking to buy low, sell high, big emphasis on buying low, and if we can get a dip down to, I mean, really anywhere from, I would say, 24.71 down to maybe 24.68 and 3/4. Anywhere inside of there is going to be a potential buying opportunity. We do have some upside objectives that are still open. 24.75 and 1/4 is still an open upside potential target for the buyers, and that lines up pretty perfectly with the range highs that are only a tick higher at 24.75 half. So a lot of profit taking is going to be expected up here, and I would love to see one more pullback before it hits it so we can try to buy into it and finish the job off. Overall, though, the bigger picture is looking to the bull side and probably looking to complete that $2,500 mark. We're not too far away from it, and a good pullback might be all it needed. And this could be that pullback all down here on the bigger picture. So definitely looking for the bulls to start coming in over the next couple days, maybe even next couple weeks, depending on how long they want that to keep going. But for the most part, for us, we need a short-term pullback to buy into before we can do really much of anything. So that's going to do it for the outlook. Overall, again, like we said, the markets aren't really accomplishing a whole lot. We are getting some halfway decent movement, but they're not really getting very far. Tomorrow's news announcement calendar does have a lot of stuff going on, but a lot of it is for the UK. At 4:30 tomorrow morning out of the UK, we have the Services PMI for July. At 7 o'clock out of the UK, we have a bunch of stuff. The Bank of England inflation report, the Bank of England interest rate decision, forecasted at 0.25% for August, the Bank of England MPC meeting minutes, and at 7:30, the Bank of England Governor Carney is speaking as well. So lots of stuff out of the UK tomorrow. If you are a UK or, sort of a derivative trader or a a British pound trader, yeah, it's something that I would definitely be a little bit careful of tomorrow. But for the U.S. session, we really don't have anything going on until around 10 o'clock. Once 10 o'clock hits, then we have the U.S. ISM non-manufacturing PMI report for July, forecasted at 57. The previous was 57.4. And then tomorrow evening at 21:30, we have the retail sales month-over-month for June out of Australia, again forecasted at 0.2%. But that's really about all we have for tomorrow. So another day where we might have some pretty good early morning movement, and then a whole lot of nothing afterward, or we have a whole lot of nothing going on in the morning and the afternoon gives all of the moves. Obviously, I'm hoping for the latter because I'm a morning trader, but either way, like we always say, make a plan, trade the plan, follow those rules, you'll be okay. Until next time, we'll see y'all then.